Hi Trader, Shane from Global Market Trader. Just going to take you through a counter-trend sell setup. Now what I want to do is just spend a little bit of time talking about the indicators and just getting you familiar with what we're looking at. So our first one here that we're going to look at is our volume spike. So each of our indicators prints down the bottom of our chart. There's only one, there's a couple that will actually appear on our chart. So with our volume spike, it'll come up, if we do get a volume spike, come up as a red dot on our line here. So if you see that occur, which we have here, it's telling us that we have a volume spike that's occurred. Now what that is basically climactic volume buying. So it's telling us that there's a climax in buying, and that really is our first indication that we're looking for a potential trend change. So this is a counter trend strategy. So what we're looking for is we're looking for a combination of things to occur to get us into the market for a potential high probability counter trend setup. So some of the entry filters we've got and some of the combinations that we'll be using to take trades will be a volume spike. So where we potentially see climactic volume, so that's really telling us that that's really signaling that the volume buying or selling has been exhausted. So in this example here, with price moving up, and you can see we're in a fairly good strong uptrend, we're looking for buying volume to be exhausted. So that's that first indication there, so the volume spike. Now the next of our indicators, which is divergence, is usually accompanies a volume spike. So that's really telling us that the buyers are running out of momentum. So remembering that volume is the fuel for the market. So we're looking for price to potentially making a higher high, but we're losing that volume, that amount of buying volume, and that's where we get that divergence, and that's really what we're looking for in our chart. So when you see the red dots appear on under volume divergence, you're getting a combination of a volume spike plus divergence, telling you that the fuel that's driving this move higher for the buyers is starting to weaken, and then we might look for it. Then we'd be potentially looking for a third entry or third filter, and we have there a double top. So when we see a double top in play, which we've got here, we've got a nice little double top, then we're seeing that we've got, yes, a tick on volume divergence. We do have a volume spike there. We do also have a double top, and you can see our yellow dot. So when you see the yellow dot appear, that's telling you that we've also got price divergence. So price is making higher highs or starting to make a higher high, but the MACD, which gives us our indication that we've got divergence, is making lower highs. So it's just telling us that price is not, we don't have the momentum with price that we thought we might have had. So that combination of price and volume is very powerful in telling us that potentially we've got a counter trend trade setting up. So ideally we want to look to trade in the direction of the counter trend. So we would be sellers here on this trade. And the last one is that trend confirmation. So as we move, as you can see, as we're moving up, we've got that strong green uptrend, and then we start to move into a downtrend. Now, you're not always going to get the trend confirmation because it's a counter trend strategy. So that's usually the last thing to confirm, or it may not even confirm. But if we can get at least 3 to 4 of these here, these entry filters, then we've got potentially a high probability setup. Now, a couple of things on the chart here, you'll see that we've got some of our indicators here. We've got this red cross. Well, that's our entry point, and then once we're in the trade, so you can see that our entry is 99.95 on crude oil. Once we're in the trade, that actually becomes our trailing stop. Now, with our setups for counter trend strategies, our stop is always going to be above the previous swing high. So you can see here for this example that our swing high is there at 14. So we're going to push that up to 16, 17, and that'll depend on what you're testing indicates as your optimal stop level, but ideally you want it a couple of points above that previous swing high just to make sure that you've got that stop placement well. So as I said, it's a counter trend strategy. The idea is that we're looking to get short following this long trend. There will be some point in time where this trend starts to weaken and gives us an opportunity, and this has occurred here. We'll see that price down triggers us in here short. So once we get short now, what I generally do is I've got a requirement for particularly for my setups, that price has to move at least 10 ticks in our favour. So if we go in at 95, we've got to have it move 10 ticks to 85, and then we'll start trailing our stop. Because you just want to make sure that, now you can obviously have an automatic trail setup, that's fine. You can, the variables are that you can set the trailing stop to whatever you decide you want to have it. But basically, once we're in the trade, we start and we move 10 ticks, then I'm looking to trail this down. You can see the price starts to move down nicely, and we're starting to get volume divergence on the selling side now. So we're starting to get a potential buy setup. Down here you can see that we get these cyan dots. So that's telling us that, you know, the trend looks, the counter trend looks okay, but it could potentially be starting to weaken. But you can see here, this is a great move. In at 95 and we're pushing down, we've gone through 60, 50 seems to be pushed through quite easily, and you can see that our crosses are following down. So this is our trailing as we go further and further down, or our take profit area. This is, we call this our TP, our trailing take profit line, and you can see that it eventually gets knocked out there at 37. So we're done at 37, and that's a nice little profit there. So you can see as we trail down here, we get knocked out here at 34. So price in at 95 and eventually gets taken out on the cross at 34. Now you may have had an offset there, so that could have been 37 or 36, so 2 points above that level. But some people use the actual crosses as the take profit area, and that would have been a plus 61. So $610 on crude, and this is actually trading towards the afternoon, start of the US afternoon session. So that's a nice trade on the counter trend strategy. Let's go through that again. So the indicators we have on our screen, we've got our volume spike indicator, we've got our volume divergence indicator, we have our double top, we have basically the MACD, or we've got it coded so the MACD or price divergence will appear with a yellow dot. So when you see that yellow dot, it's telling you that there's price divergence and there's a potential for a counter trend trade, and combining that with divergence and a spike and the double top is a very powerful combination for a high probability setup. So we get that trade set up there, and you can see here that again we get that nice little double bottom. We've got divergence, and we should hopefully see a little bit of a move up, and we do. So you can see price starting to move up in our favour there. So that's great. So again, what you're looking for is you're looking for these double tops, double bottoms. This is on a 55 tick on crude oil, and an opportunity there to take some profit as well. But as I said before, this is the counter trend sell setup. So the key things here are just making sure that you might decide that you don't want to go in on all filters. You might just decide you want to take the trade based on the volume spike. But the more combinations we have validating the setup, the higher probability the setup's going to be. So that is a quick look at the counter trend sell, and there'll be more videos coming along. So thank you for your time. Have a great trading day, and I look forward to catching you on our next training session. Cheers.